Dear audience, dear honorable speakers, thank you very much for joining us today. Today we're going to talk about AML again. The topic that we are going to talk today is AML Audits 2.0, 2.0. Why? Because this is the second webinar on the AML audit, and the first webinar we had was, I think, in 2020. Today, what's going to be different from 2020? Today, we invited more professionals to join the event, to assist the market participants basically to understand why the AML audit is needed and how it should be performed. Because everybody knows that AML audit is needed, but how, when, and why it should be done, sometimes there are some questions. And this is why we are here to answer those questions. From our experience as law office, we see that the need for AML audits is growing, not only for internal use, but also for external use. And for internal use, of course, everybody understand that we need to somehow test how our AML program is working and whether it's working correctly, whether there are any deficiencies that need to be rectified as a third line of defense. But then externally, we see the need for example, for correspondent banking relationships, for relationships of agency, let's say, or even supervisors sometimes ask to present the audit report. Once we start and we understand that there's a need for an audit report, we need to understand what is the goal of that audit report, how it has to be done, who needs to be engaged in that process. And today we are going to talk about that more. I would like to introduce our honorable speakers. So firstly, I will start with Andres Merkelis. I'm very happy that I've seen him in many other presentations on AML topic, a very experienced person. Right now, he is the head of AML working group at FinTech Hub LT Association, which actually comprises, I think, more than 50 Lithuanian fintech companies. And he's also an expert in AML and CFT area. He's working in that area for more than 15 years, so very experienced person. He has CAMS and CAMS audit certificates. So he's going to talk more about the AML audit experience, how he sees that process as a person working in that area for many years. I also asked our very good colleague to join, also Karolis Grikšas. Karolis Grikšas is working right now in a very successful Lithuanian fintech company, Walter. He's also a certified audit professional. He has been working in that area for quite some years. He has been working with banking sector, insurance sector, e-commerce, telecommunications, and right now he's actually an internal auditor working also on AML audits. And finally, I have also asked my colleague Edgars Pastars to join me. He is from Cobalt Riga office. He is an AML specialist, head of AML in Cobalt. He is certified, has a CAMS certificate, and he's actually very highly respected public law expert in Latvia and also in Europe. So I'm very happy that he was also able to join us today. And maybe my colleagues will be able to tell more about themselves, but I will introduce myself also. I am Aurelia Balčiūnė, working in Cobalt Vilnius office for, I think, 9 years already, specializing in banking and finance area for more than 10 years. I've been working with the AML area, I think, as of 2013, when this topic became important, and everybody started trying to understand how the AML area works. And I do remember that at that time, there were not so many professionals, even in the Bank of Lithuania, understanding how the AML regulation works. So we worked hand by hand to develop this area, and I'm very happy that we came so far. Today, I will give a presentation on AML audit from a lawyer's perspective, how we see this process should be handled. And I hope that you can see my slides. Just to understand where the topic comes from. So we have 5 pillars of successful AML program. Where these pillars come from, actually, These pillars have been published and disclosed by the Financial Crimes Enforcement Network in the US, but these pillars are widely used in the market in the whole world. Basically, to have a successful AML program, we need to have 5 very strong pillars or grounds. Internal control system, meaning that we need to establish and develop internal policies, procedures, and related controls. We need to understand and actually have appropriate risk profile, which is understood in developing the internal risk policies and procedures. And these procedures have to be prepared, of course, in a written form so that everybody understands how they work. And all the roles and responsibilities of each part of the financial institution, they have to be defined in these policies. I mean, board members, senior management, other staff, everybody need to know how the AML procedures work within the company. Then, of course, designation of AML officer, compliance officer in the AML area, provision of sufficient resources to the AML officer. I mean, not only human resources, but also actual access to information. Then trainings, thorough, ongoing, tailored to a particular employee. Let's say onboarding staff should have one information, management should have another information, and these trainings should be tailored depending on the function that a person is performing. Then we come to the independent testing, and this is the part what we are going to discuss today. Independent review for compliance AML audit. This is a very important 5th pillar, and of course, in terms of the lines of defense, the 3rd line of defense. And why we are talking about that today? You know, I don't like talking about sanctions, because sanctions, it's only the end, you know, but basically, this is a greater good that we have to achieve by complying with the AML regulations. But what we see in practice right now, we just made a check of the website of the Bank of Lithuania, and we searched for sanctions that were applied for breaches in AML area. So in 2021, we see that there were fines applied with respect to 6 market participants, then even 2 license revocations and 5 more warnings. In 2022, so we have already, like, the start of the 4th month, 3 fines, no license revocations so far, and 3 warnings. And the breaches, the usual breaches that have been discovered. Inadequate internal control mechanisms, so we discussed about this 1st pillar. Failures in customer due diligence, failures in enhanced due diligence, meaning that maybe some additional measures have not been applied where they should have been. No or deficient transaction monitoring, or failure to perform client risk assessment. So why we talk about this topic in terms of AML audit is because, as mentioned, internal audit is the 3rd line of defense, which helps us to understand how our AML program is working, whether it works correctly, whether something needs to be rectified. You know, it's like you know, having a supervisor inside your company if internal audit function is performed internally. So just to understand what is an AML audit, we have FATF recommendations, and even in those recommendations, I mean, Financial Action Task Force, it is said that financial institutions should be required to implement programs against money laundering and terrorist financing, which have regard to the money laundering and terrorist financing risks and the size of the business, and which include an independent audit function to test the system. So as I mentioned, testing the system, this 4th pillar, becomes very important in terms of understanding how your AML program works. I actually used this very useful source for collecting this chart, but I really like this picture and this diagram, how it shows how the AML audit model should work. So first of all, it's very important. The very first step is to assemble knowledgeable AML audit team. Either you have it internally, and when engaging an internal auditor, you have to understand whether it has he or she has enough knowledge and experience. This is the first thing. If you hire somebody externally, you also need to check the expertise and background. It's not enough, that Cobalt or another audit firm is serving you as a very well-known wide name, but you also need to check the background of the professionals that are going to perform an audit. And always what we have seen, everybody is searching for let's say, some kind of certificate that the person has. But what we have seen also in our practice, that certificate itself is not enough. And we need to check whether that particular person really has experience in AML area and what that experience is. Because, the process of AML is very, very wide. And when you start checking what the person knows, it might be the case that that person knows a very, very small area of the whole AML process. So very important to gather very knowledgeable AML audit team. Then, of course, audit plan. Setting objectives and goals of your audit. It's very important. We are going to talk about that a bit later, but basically it's very important to have an audit task prepared. Because if you apply to any law firm or audit firm for an AML audit, everybody will ask, what is your AML audit task? What do you want from that audit? Because depending on the purpose of the audit, the result might be different. If you want to have a full, thorough analysis, there would be one task. If you want to have an analysis maybe of a very particular area, the result will be different. So very important to set objectives and goals of your internal audit. And also, if you have an internal auditor, you always need to have an audit plan, a plan for the future. What each and every year, each and every month will going to be done in terms of the audit and what particular areas will be checked. Then, of course, in that area, when you start the audit, of course, it's very important to perform a comprehensive review of AML risk assessment. So we already know that each and every company has an AML risk assessment report, or should have. Based on that risk assessment report, of course, your policies need to be prepared and your AML program should work in line with your risk assessment. So definitely risk assessment report should be reviewed and analyzed in detail. And another important area in the audit, of course, is interviews. Interviews need to be performed with the staff members that are involved in AML processes. Why that is needed? Because not everything can be found in the documents. There's always some practice not written down in any policy, procedure, or instructions, and even sometimes the staff can find or point out to the deficiencies that are involved in the company. And why I'm telling you that, for the financial market participant itself, organizing and ordering the service of an audit, it is very important to understand that you need to involve your staff in the audit and to explain them that they should not be afraid of the interviews themselves, and they should be willing to cooperate and disclose the necessary information, because only then you will have the final result that will disclose what needs to be rectified. Otherwise, if everything is hidden, you will never find them until the supervisor comes. So that is why it's important. Then, of course, in the process of AML audit, one important section that's going to be checked are AML policies, procedures, processes. Also, all the factual information, how the KYC process, CDD, EDD has been performed in respect of a particular client. Most probably there will be some samples that going to be reviewed by the auditor. And of course, it's very important after that to develop and implement sufficient testing plans for controls, processes, and monitoring. So the audit itself is not finished with the audit report. After the audit report is reviewed, it's very important to implement developments in the processes. And of course, documentation stage, the result stage, checklist, and track and confirm resolution of identified issues. Very, very important part. So you have your audit report done. You have deficiencies indicated therein. Please track whether these deficiencies have been corrected. Please have a rectification plan with particular deadlines, because this will assist you not to forget the deficiencies that have been found and to rectify them. And I already mentioned, so who can perform the AML audit? Usually what we can see, there's an internal auditor or audit committee, independent from the function he or she or the committee is supervising, very important one, independency. Then having adequate resources and access to information. Resourcing meaning that human resources, cost resources if that is needed, and of course access to all the information needs, documentation-wise and also person-wise for interviews. And also external auditors, as mentioned, certified auditors, external lawyers, or combination of auditors, lawyers, and other professionals. What we have seen in our practice, the auditors are very good in performing the audit, but also they always need to be supported by the lawyers, because only the lawyers, they are well aware of the regulation and how it works, and whether the procedures and the processes that are implemented, whether they comply with the applicable regulation. So very important, if you check, if you engage an external advisor, please check whether that external advisor has lawyers involved in the team. As mentioned, independent, must not have been involved in the risk assessment, creation, or operation of your AML and CFT program, qualified, understanding regulation, previous client experience to understand whether that particular person actually has experience in performing the audits, audit experience itself, and industry knowledge. When I mentioned previous client experience, I mean that if you had already experience with that auditor, whether you were satisfied with the results achieved. And this is a sample audit roadmap. What should be assessed during the audit? What is a successful AML audit program? Usually, governance and internal controls, procedures, policies, everything that are involved in the AML processes, these should be reviewed, analyzed whether these comply with the regulation. First thing, another thing, whether the processes that actually are implemented within the company, they comply with the processes that are drafted. AML and sanctions risk management strategy, compliance with international sanctions, meaning sanction screening processes, customer risk scoring, customer onboarding, KYC, CDD, EDD processes, customer relationship termination, transaction monitoring, suspicious activity reports, reporting, external inquiries, let's say, from the supervisors, employee functions in the area of AML and CFT, adequacy of resources, trainings. You have to check whether the trainings actually have been performed and whether these trainings are, have enough quality in them, and whether the employees have been tested after those trainings. Record keeping, previous audit reports, whether the deficiencies identified therein have been rectified. So this is the actually usual roadmap, what is checked within the audit. Then only there's a question whether there are any particular areas that should be additionally checked. This is one thing. Another thing is the sample portfolio that needs to be revised. Some companies ask, to check 50 sample clients that have been onboarded, whether the CDD procedure has been carried out correctly. Some other companies give a much larger sample. So this is the standard, let's say, audit task that applies to the AML audits. Another very usual question is regarding the frequency of the audits. I will not give you an exact rule. The tendency in the world is between 12 and 18 months. Right now, what I see in our client base, that at least annually an audit report is performed, especially where there is an internal auditor. Maybe Karolis will be able to correct me, but this is the expectation. And of course, specific purpose, the need for the audit. Sometimes there might be an additional need for additional audit. For example, if there's a partner request, let's say in correspondent banking relationship, if there's a supervisor's request. This might be also the case where an additional audit might be performed, and maybe the area might be different in comparison with a general audit. And 3 minutes left. What are the challenges to ensure efficiency in the AML audit? First of all, as mentioned, the financial market participants need to define the goals and objectives of the audit. Because if you want to achieve a specific result, you need to define what you need from that audit. What we see in the situation, sometimes the clients apply and say, I need an audit. And what is the result that you want from the audit? What is the objective or purpose of that audit? I don't know, I just need an audit. So very important to understand for yourselves why the audit is needed, what is the general specific purpose for that. Of course, as mentioned, appointing a knowledgeable auditor, check the background, check the experience, check the qualification. Good document review and audit range planning. As mentioned, check the audit range, how many sample clients you want to be reviewed. Please collect all the documents that are needed for the audit itself. Request for AML interview. If you are engaging an external auditor, request that the interviews are being performed. Because as mentioned, through the interviews, we can get even more information about the internal AML related processes. This is what you cannot get from the documentation, and very important part of successful AML audit. Then, of course, ask for the informative audit report with clear findings. Definitely in a written form, definitely with findings and even with recommendations to rectify if possible. This will help to make use of the audit report itself, so that the audit itself is not the end of the process, so that the audit itself is the beginning and the tool for you to make the AML program better. And prepare a detailed rectification plan with deadlines and action plan. This help for yourself internally to make the process work. And most importantly, I think everybody, Andrews, Karolis, and Edgars will admit that you need to be cooperative and transparent. Disclose information that is needed for your auditor. Only then you will obtain an audit report that is needed. Disclose your weaknesses, allow your staff to disclose the weaknesses, explain your staff why the audit is needed, and allow the auditor himself to understand your business model. Understanding the business model also is a key. So as mentioned, AML audit is not the end, it's actually the beginning. The beginning that is assisting you in successful operation of your company. Third line of defense, very important line of defense, and very important line of defense, assisting the company itself to keep alive. So I pass the hand to my colleagues to continue with the presentations. And right now, I will ask Andrius Merkelis, as mentioned, head of AML working group at FinTech Hub, and also head of AML, if I recall correctly, of Mano Bankas. He will continue talking about, let me open his slides, about AML audit, whether it is a burden or whether it is an opportunity. And I am sharing his slides.
Okay, can you hear me? All good? Thank you. Yeah, so hello to everybody. And thank you. Thank you, organizers, for having me in this interesting event, interesting presentations, interesting presenters, and I would like to share my experience and how to say and recommend something on how this process could be better and less painful for everybody who has possibility to be involved in this process or to be a part of this process. So my name is Andrius Merkelis, already was introduced, so will not take time on trying to explain more about myself. So I want to start from this picture and ask you, does that look familiar for everybody? Like, we because in many situations we are starting from big understanding that we are in the we have some problems. During audit, it looks like everybody is involved and we solving our problems and never again and so on. But after audit, after the audit, something happens that we are getting back to the same road. Yeah. So please remember that it's all about it's not just a process itself. It's more to help organization and to make some changes. And okay, so let's start from basis for AML audit, and you will see that in some situations I will a little bit overlap what Aurelia already mentioned, and just for you to explain that internal audit is the part, how to say, mandatory part of internal ML internal control process or framework. And Aurelia mentioned 5 pillars of ML program, which is very clearly described in in US law. In European Union, we don't have such a clear understanding of that program, so to say, but we have in our local legislation, we have clear understanding that what's needed for good ML framework, for good ML control system, and it's 10 aspects, 10 points, and we could say that it's described ML framework or ML program. So audit is the aim of audit is to ensure that this system or this framework or this control ML risk control measures works in according or in compliance with the law. So and all aspects of this system are implemented correctly. So this independent testing, and when we're talking about independent testing, we, of course, as auditors, we are talking about 3 lines of defense. Not 3 lines of defense, never again. We're talking about 3-line model. Yeah. So previously, 2 years ago, it was like 3 lines of defense. Now we're talking about defense. Sounds a little bit complicated. So now all auditors are talking about 3-line model. Yes. So the third part of this, and I would say that if you will ask, sometimes during my presentations, people asking, okay, when you're talking about 3-line model, the third line, internal auditors, internal audit, how you could describe that? And I'm always like to say that auditors are, they could be described as who watch the watcher. So it means they should ensure that first line and the second line, they are in good mood, in good cooperation, and so on. So they should look for and ensure that they are cooperating, they are doing everything according to the expectations and law, and they are not fighting against each other. So who watch the watcher? Yeah, always the question. So I think it's internal auditors should do that. So, and of course, in addition, of course, internal ML audit always serves to demonstrate effectiveness of ML control measures to supervisory authorities. Why we're talking about that? Because normally when authorities are visiting you, they starting from the question, could you please provide your last internal audit report? So it's like starting point. Everybody understand that if you want to see something, you should take procedures, policies, and internal reports, or internal audit reports, or external audit reports. It doesn't matter. But itself, it's very good starting point to understand what is the how to say mood of the organization, what is the quality. And it as a starting point, it's always good. Okay, so as you saw in my presentation, topic is burden or opportunity. So let's start from burden. Yeah, we all understand that audit it's a burden. Yeah, it takes time, and everybody it's time consuming. Everybody understand that when we're talking about audit, we should be prepared for at least 1-2 months of process. Yeah, so process will take time. So if you don't have time, you should not start this process or you should not be involved in this process because it will take time, at least 1-2 months. Complicated by remote nature. I think previously it was practice that all auditors, the most time they were working on site, so they were visiting, like face to face, and so on and so on. It's easier to communicate. It's easier to understand. But I think during last 2 years, I think everybody will agree that the majority of all actions they are done by remote nature. Yeah, so it means like it's not so sufficient. It's not so effective. So you should always be prepared for spending more time on this to clarify some things, because non-face-to-face communication always during non-face-to-face communication, of course, you are losing some percentage of like information of effectiveness and so on. So it's but I think I don't know what will be in the future, but now it looks like a tendency, and everybody should be prepared for that. Collecting of statistics, so sampling some statistic data, customers data, and so on. You should understand that audit, it's about checking of data, about sampling, about reviewing, about how to say, collecting and so on. And it not always it will be in the same format, in the same way as you have this information. So you should always understand that you should be you must be able to, how to say, to transform data in understandable for auditors format, to provide some statistics which in the way which you never before collected such a data, because it's a burden. Everybody understand, but you should be prepared for that, and it could take time. It could take your, how to say, attention. It could cost, but it must be done. I think, yeah, it was mentioned already that you should understand that there will be multiple audit meetings. You will be requested for demonstration meetings. You should be requested for additional information one and again and again. So this process during this time will take will be really complicated. And if auditors are doing the job in good way, so of course they will be keen on information. They were always asking to explain, to demonstrate, to ensure that they understand it in correct way. Otherwise, we should not talk about good quality audit. So this is burden, but you should be prepared for that. Opportunity. What outcome could be for you in case of audit? What you could earn from or obtain from that? If audit is done by professionals, of course you will receive how to say, overall holistic view on your ML processes. So maybe you have your opinion how good you are, but please remember, don't wait until regulators will show how bad your processes are. It's better if auditors will show you hidden issues and will provide you, how to say, will provide you some insights what to do and how to make them better, and ensure that you are that you are good in implementing of regulation. Benchmarking with other market players. It's in case of your audit is performed by third party. Of course, auditors will never disclose, how to say, will not compare you with others. But if company is huge, I don't know, Big Four or good known law company, of course they are doing many audits, and of course their expectations or some, how to say, findings and the evaluation assessment of these findings could ensure that if they say you are good, it means they have possibility to how to say, to compare. And if they're saying that you are good, it means that you are good in comparing to your, how to say, peers within the market as well. So of course it's not how to say, it's not proved, it's not written, but itself you could expect that. And of course, to demonstrate effectiveness of AML framework to supervisors and correspondent banks. So if you're doing good enough audit, if you're doing, how to say, very detailed audit, and if you're involving good known companies or audit companies and so on, so it means the report itself will be like, you know, evidence that you are good, and it will be evidence to supervisors and to your main business partners, and correspondent banks is one of the most important part of our business. And of course, correspondent banks, they always asking for how to say, to share internal audit how to say, report or conclusions or something similar. So it will make you possible to demonstrate that you're good, your system is good and effective. Main considerations, I would say that of course, but if you're planning your audit, and as it was mentioned already, you should plan it at least once per year, or sometimes twice per year, depending on the how to say, on the whether you are checking whole system or whether you are checking some specific parts of your AML framework. So, and before that, you should plan, you should expect that, and you should assign additional resources. So it means you should, it should not be this way that oh, audit, but yeah, I'm busy. It's like, you know, it's end of quarter. I should provide report to somebody. I have no time. So why you bothering me? Why you asking this information? No, it's not good. A good way to start your audit. You should prepare and you should assign this resources. Expect that there will be issues in providing information to auditors. Yes, you are, as I mentioned, you are collecting data in one format, in one way. Auditors, maybe they will ask in different way, in different formats. So please prepare your, how to say, IT system providers or some IT guys and CTO for these challenges. They should be, how to say, ready, not on vacation or something like that. Dedicate time to cooperative with auditors to eliminate miscommunication, especially in the final stage of the audit. So it will take time, your time and your colleagues' time. And what I see, and I think everybody will agree with me, sometimes it starts from very good shape. So it means everybody is happy about audit and so on. But more we go into the forest, more woods we will see. Yeah. So everybody becoming angry. Auditors, they don't understand. They asking questions again and again. I don't like them, and so on and so on. It's not good way to cooperate. It's from the beginning till the end, you should cooperate. You should, how to say, if you have any questions, you should ask auditors. Auditors, of course, will explain, and auditors, they should explain what and how and why they asking. Yeah, but from the beginning till the end, because the final stages of the audit are the most important, because it's all about that. It's all about report. It's all about action plan, and it should be pre-agreed with you, and it should be clear for you what to do with this report or audit report. If it's not clear for you, it's about nothing. So you just spend your time and money about nothing. And specialized audit, of course, conducted by ML professionals will yield better result long term. So you will not find it's too expensive. Maybe it's not. It's possible in huge financial institutions, but normally for small fintechs, for startups, maybe they have their own internal auditors. But normally these auditors, they're doing audit for all areas. So you should not expect that your audit will be very, how to say, comprehensive, very deep, and so on. So if you really want to get good result, if you want to really understand your, how to say, your status in ML, status of your ML framework, program or process, you should spend your time and money and employ and to request some, how to say, good known company to help you in that. It's recommendation, of course. It's not mandatory. And if there will be any questions, I'm be more than happy to answer. So thank you for letting me share my I don't know, experience and provide you some recommendations.
Andres, thank you very much for your presentation. It was very interesting, I think, to the audience, but also to myself. Two takeaway notes, at least for myself. These are 3 lines model and not 3 lines of defense. Very good point and very good attitude towards that model. And another takeaway to me is that, of course, it is a burden, but it's also a great opportunity for the organization. And in that regard, I would like also to ask Karolis to take the floor. The floor is yours, and I will just explain that Karolis, as mentioned, he is an internal auditor at Walter, and he is experienced internal auditor who is able to share the views of the challenges that he faces in his daily work. So, Karolis, the floor is yours.
Thank you for presenting me. Hello, everyone. It's my pleasure to join Cobalt's legal team and other colleagues to present on the internal audit department establishment and first-year challenges topic by sharing my own professional view. I will shortly begin by introducing myself. My name is Karolis Grikšas once again, and I'm internal auditor at Walter, electronic money institution. Currently, I'm working on my own in the internal audit department. That is managing audit engagement, financial institution who provides online banking solution, currently for B2B segment. IBAN accounts, SEPA, SWIFT payments, exchange, and prepaid card related services. Company has offices in Romania, Bucharest, Vilnius, where I'm working, and Tel Aviv. Core compliance team, just to have a background bone structure, is KYC monitoring and money laundering reporting officers located in Vilnius, as I am. This should give you a brief understanding of core business nature and the organization having a cross-cultural DNA, right from its beginning in 2018 when the company was established. Before Walter, for more than 8 years, I have been working for Big Four companies, starting from consulting department and ending in risk assurance services. Most of the time, for the past 4 years, I was working with IT controls, SOX, and other internal audit related engagements. Most of the engagements were done for the large corporations, as Aurelia mentioned, from telecommunication, banking, insurance, e-commerce, pharmacy, retail, and manufacturing sectors. I have also experience working on audit engagements with public institutions. So to continue, today I have tried to simplify the journey in decision-making process over internal audit department establishment and its alternatives to present the benefit and costs from the organization and shareholder point of view, and give away my lessons learned during my professional journey. So let's begin with in-house or outsource. Shortly after the introduction of changes in the electronic money institution law regards the internal auditing requirements in around 2016-17 year, please correct me later on, there was introduced an outsourcing alternative for the audit function. Therefore, the new possibilities have been presented to the market to either have in-house department, outsource audit function, or have a combination of both. In this case, more alternatives are welcome by business, but which one is the best to exploit and under what circumstances? Usually these the questions are raising. So let's begin with in-house developed department of internal audit. In my opinion, in-house solution should always be considered when business is eager to expand and grow as key and primary measures. This enables more effectively to adopt and share know-how across the organization and support efficiency or quality lacking department or business units. Furthermore, it enables the possibility to provide internal consultation type projects for the activities not considered under the audit engagements, review or improvement, development of policies, procedures, or internal controls. Finally, the acquired knowledge and competencies are fully utilized within the organization. However, totally different approach would be applied in case of considering the outsource of the internal audit function. The key factors to consider would be the organization, services and our products being limited to a small number, and the other factor, the most of the organization functions are being outsourced. Therefore, the business model is considered to be driven by the low number of products and services being provided to the specific market. As for example, in most cases, it would be a business-to-business segment where there is a need for type 2 or type 1 reports, also known as SOC 1, SOC 2 reports for the shared service organizations. Last possible option is the combination of both methods. It gives the business possibility to grow inside competencies by outsourcing external auditors for more complex or out of internal department competence area related engagements. Besides mentioned criteria, more detailed considerations and market analysis will be the key to making the right decision of internal audit function establishment before you continue to it. Let's continue and look at the in-house journey. I will briefly give you the key principles. I will point out key principles based on my understanding that is the core. The full potential of internal auditing methodology and tools for sure can be utilized by joining the Institute of Internal Auditors. You will get an access to exploit the resources you need to set up and run the internal audit department, to develop your qualifications, and to exploit new ideas during the organized auditors meeting. Secondly, you need to understand current as-is situation and take needed actions. In my case, I have reviewed and developed new internal audit manual, exploiting all available resources. And this is not the end, because on a yearly basis, I'm taking time to develop and improve the audit manual, which has already become the part of company know-how. Furthermore, one of the key things to successful audit engagement is the developed risk management documentation. It is important to define and agree on key risks so that audit work would be utilized in the most efficient way. And last but not least, when conducting the first internal audit engagement within the organization, it takes more time. As mentioned by Andrews, it takes more time to set up and execute the audit. However, after it's done once, it's becoming more structured and less time consuming regards the preparation. It also enables the auditor to take more attention to the risk matters areas instead of focusing on the whole engagement, meaning preparation of testing templates, information requests, finding trackers, reports, collection of evidence, and other administrative tasks. So once it's done for the first time, then it will only get better and better. If it's not getting better, then we may have other issues such as motivation, competence, growth, potential, and others that I will not get into details because it's a soft skills and direct managers areas. Let's move on and look into the cost versus benefits analysis done for you. So if you are still in the doubt of searching for the best internal auditing alternatives, I will share with you the benefits of our company model that is in-house plus outsourcing functions. So first of all, having internal auditor, usually it is granted with the most extensive access to the company resources as a standard via read-only type of access rights. Therefore, the auditor is more efficient and can easily adapt to the changing situations and do the necessary analysis by himself before making any relevant conclusions. It also enables auditor to assist other company departments in case of the external investigations or audits, so that the primary focus would be kept to the business activities. And the other very important advantage is the spread of the know-how, as mentioned, and the best practices throughout the organization in more effective manner. Internal auditor presence in the company enables the senior management and other employees to discuss and or coach with the auditor regards different issues or risks. Also, when considering combination of in-house and outsourcing model, it enables the company auditor to have less competences. Therefore, the missing competences are being covered by the external audit engagements. From other point of view, it also gives more flexibility during the search of internal auditor and ability to grow its competences within the company. My example is related with test of cybersecurity risks, where the specific knowledge must be acquired to perform such tasks. My example is that I don't have at all any competence to perform penetration testing, gray box, black box, white box testings. Therefore, it is important that our organization is able to exploit external audit services and utilize them. Furthermore, especially when we are talking about the young companies, it is much easier to share the organizational culture from the start by having the internal auditor and the risk manager. Their, their presence is working as a kind reminder about the risk-based approach. Also, they are providing consultations and discussions regards the risk-related or control process matters. And also, internal audit department can act as a centralized non-financial audit coordination center. Once again, it will not take over other senior managers or team members' work, but it will help to keep them the focus to the business activities by utilizing internal audit resources. It helps basically to coordinate and manage the external audit engagements. And let's look at the cost side. So basically we have two cost numbers, which out of them, one is auditor's cost and external audit costs. So according to the International Institute of Internal Auditors conducted survey and released in 2019 about the overheads of internal auditors in the Baltic countries. Please give me a ping if you want me to share the sources later on. So you can find the document that at VAA.lt website. I have taken from the internal auditor position salary average in private sector that was around 1,500 euros net. So it will be around 2,500 euros gross salary, and annual result will be around 30,000 euros per year per auditor. The position should already have at least 2 years or more of working experience, and depending on the developed competences, the cost for sure can be different. And the other part of our organization cost considering internal audit department is outsourcing cost. Depending on the scale and scope of the external audit projects, the cost for sure may be different. However, if we are considering the familiar size and business activity as a Walter company, the external audit costs may vary from 10 to 20,000 euros and more. In this case, it includes around 2 different types of audits. For sure, different scale and number of available services products will be subject to the price variations. So let's continue and wrap up with the lessons learned. As a final slide, I want to share with you what I have learned and what we as an organization have learned during our journey after working in internal audit department. So first thing is the detailed planning is a key to success, as Aurelia already mentioned. When looking into the AML model, it doesn't mean that you need to do the planning once and leave it. It actually means that you need to be aware all the time about the plan and the actual station. In case there are any differences, you need to reflect on that, and if needed, update the planning. It helps to manage the expectations within the company and audit engagements. Furthermore, cooperation with the risk manager. This is quite obvious statement for all of us. Therefore, I will not go into deeper explanations. I just want you to remind the obvious thing, to have a close eye over the guys or girls will give you the understanding of meaning to have the close eyes over the guys or girls that are working in risk manager position and internal audit will give you a brief understanding of how the cooperation, whether the cooperation is successful and whether the results will be delivered also as a successful results. Meaning good climate will end up in a good results. Third, track the findings all the time. From my point of view, it is best catalyst for enabling the risk-based culture in the organization. It could look as an annoying thing to discuss over and over again. However, it helps to encourage various discussions and creative thinking about the risk mitigating factors. If you are not having the solution at first couple meetings, for sure you will roll it out in the upcoming ones, believe me. Next point is internal auditor proved to be able as a valuable support during the external investigations. I'm talking from my own experience. Once again, it takes off some of the workload from the team members so that they could focus more on the core business activities. It will not take the full load of such investigations, but small help at least already is a help and already gives them a bit more freedom. So also at this point, I want you to remind that in-house internal audit department can act as the centralized external engagement coordination center that helps to deal with the workload. Next point is the internal audit and risk manager functions are fully sensitive, considering that it's directly linked with the other department operations by analyzing, risk mapping, and auditing them. Therefore, the quality improvement or the feedback process at this stage is very important, especially when working in cross-cultural environment. It is important to manage the expectations so that the team members would be on the same page. And the last thing is having in-house audit department enables the company to request for the internal consultations when working on the new services, products, or developing, updating the existing ones. I call it the pickup of low-hanging fruits. Of course, the auditor must remain independent when conducting such consultations. Therefore, once again, as Aurelia mentioned, good planning is the key to success. At this point, thank you for time to present.
Carlos, thank you very much for your presentation. It was very interesting, very good auditor's view, internal auditor's view. As last time, I always have some key takeaway notes for myself. I write them down. So this time, two very important ones: execute, report, and repeat, which is meant that this is a continuous process. Audit is a continuous process, and we need not only to execute the audit, we also need to report it in a document, and we need to repeat it once again annually or within another period. This is one thing. And we agreed with Carlos, I think, in our presentations that detailed planning is key to success. So Carlos repeated this, and I'm very happy to point that out again, that detailed planning is necessary in this process. One administrative point before we go to another presentation is that you are allowed, entitled, and we would be very happy to hear any questions from you. So if you have any questions, you can type in your message or question in the right corner of the presentation of our presentations that you're accessing through the website. So please do so, and after the last presentation, we can discuss the questions you are having. And right now, I would like to invite my colleague, Edgars Pastars from Cobalt Riga office. He is a head of AML in Cobalt Latvian office. So I'm very happy that he's going to talk about AML on a very different angle in the perspective of de-risking, very popular topic right now discussed in the market. So what is de-risking and how it affects the audits also? So Edgars, the floor is yours.
Thank you, Aurelia. Thank you for having me. So this topic looks very theoretical, but I promise you I will entertain you with a lot of examples, and I guess that some of them you might find even funny. So let's go. First, so what is de-risking? Without going into details in legal definition, usually it is we are afraid, we have no skills, and compliance usually is urging business not to take additional risks because they think that they are not able to govern them. More from legal perspective, it's usually you are refusing to take several, you're refusing to take entire group of clients, even eliminating some business lines, geographies especially, regardless of the risks they pose. You are just arguing that it's based only on some AML risk or reputational issues which dictate that it wouldn't be wise to work with them. So, and this de-risking usually exceeds appropriate risk appetite, so which would be called prohibited risk. But this case, you would be able to work with this, but you chose not to. All FATF, European Banking Authority, and FinCEN, all of them, they have emphasized that de-risking should never be an excuse for the private sector to avoid implementing a risk-based approach. And I'll show you with some examples later on how it plays out in practice. And as this seminar is dedicated to auditing, so should de-risking be praised or facilitated by audit findings? What I have found that and observed that it's usually the case that after some audit report, obliged entity performs massive de-risking. So in order to be compliant, they are just following the report, not in the smartest way possible, but just doing the risking thing. So, and that's why my point in this presentation is that audit findings should not encourage the risking, which is not necessary. You should be you should teach the obliged entity to be more skilled, be risk-based approach, and try them to develop the tools which by using which they could govern their risks. So that's why it should be always done by the internal or external auditor to question and challenge whether the prohibited risk and try to define it in more better way. Also, there's usually the question where the risking starts and defining the risk appetite ends. You should need the market approach to be not to be the most conservative or not the more not the one who is spearheading the most risky business, and consider why this obliged entity is different or not. Sometimes the risking is done by mistake or incompetence. So I'll show you some examples you can witness yourself. And sometimes prohibited risk is not prohibited risk, but it's actually absent risk. Sometimes lawyers who are not well aware of the risk landscape the company is working, they say that we will, for example, there's a company providing loans to individuals, only individuals, and then you find a risk appetite statement where they say that they don't work with companies issuing bearer shares. yeah, guys, probably someone who wrote your risk appetite statement did copied something from the law, which is considered something high risk. So it should be tailor-made, not copied from someone. Some examples. For example, I found out when I did audit to one company, I found out that non-bank lender rejects all individuals who are notaries, attorneys, or bailiffs. Why? Because they found out that they are obliged entities and usually considered high risk, but not in terms of non-bank lending products, like for 500 euros or 600 euros loan. It shouldn't be the case that those should be prohibited from even being your clients just for their loans, as even if they are individuals. And hey, how would you find? Sorry, how would you even possible to find out whether the person is notary attorney, because not all lists are present here. Sometimes we see that companies define that they work with someone only established in the EU, but there is no specifications. It means what? EU company is beneficial owner from Russia, companies established in EU. You need to provide more details. This risk appetite or prohibited risk, you can't even audit it without knowing the details. Details important for risk exposure measurements. Sometimes we see that the non-bank lender as well, you can obtain small loan to buy a mobile phone, and when you check that you are a PEP, they reject you. So that's all, and there's no other risk flags here present. Why? Just because they read the law that it said that if you have a PEP, they can't be identified remotely. But there is some other legal provisions. Usually they're saying that you have to apply risk-based approach, and the risk in this case is not present. Probably the risk might be present later on, that some third party will pay off this loan on behalf of the PEP. Sometimes we see that bank does not cooperate with companies with more complex ownership structures, even if they are even transparent and understandable, without even getting into details. It can be more or less understandable, but if this ownership structure is transparent, why not? Defining that the lender doesn't cooperate with legal entities with UBS and high-risk countries. Quite a good thing to write in the risk appetite statement, but what are high-risk countries? Sometimes even it is not defined. Sometimes this provision that a firm doesn't cooperate with company in cash-sensitive businesses, they sometimes can be even curious or funny. That we had a case where some company refused to cooperate with some supermarket who provides lavatories for their clients. So that you usually pay like 20 cent or 50 cent coins. And they said it's cash sensitive business with high AML risk. So there is no high risk in lavatory if you know how to manage the risk. Sometimes the main thing, what I would like to say, that the base risk factors do not have risk weight. Sometimes channel risk should be like for 10% in risk scoring, maybe not 30%. It depends on the firm, of course, but you should use risk weight for several risk factors, not apply them as they are like similar, all of them. Sometimes bank or some other obliged entity considers all remotely identified clients as high risk, which is not true. Sometimes even remotely identified clients, you can even more rely on this identification rather than on face-to-face meeting, especially now or some months ago when you had to wear a mask. So therefore, those are some of the examples we have witnessed during our audits, that some of them are usable, some of them are not. Of course, everything depends on the firm and the client, but still we need to be more risk oriented, not just risk averse. So two examples on top of this. So we had a situation where two persons, both clients of the same bank, wanted to sell and buy a horse. And banks spotted that there might be a risk. That, there might be some under over invoicing, so some money laundering risks might be there, hypothetically speaking. Of course, 1,500 euros is not the money usually it starts from, but technically it might be the case. So what did bank do? They asked to provide purchase contract, which is usually not the case for such purchases. Sometimes, and also they asked for contract of lease of the shed where the horse will be kept, and also evidence of possession of transport vehicle for the horses. So, and the client wasn't able to provide all those documents because this client wasn't planning to transport the horse on frequent basis, just to get to his farm. So, and then the bank terminated business relationship with the client. I wouldn't say that it's a risk-based approach. Probably this should be addressed within the bank. So, how to approach such situations more meaningfully and with more proportionality. The other thing is, I think that it might be a good example considering sanctions case. So there's a purchase agreement. Company A is buying car from company B, 7,000 euros. Company B, if beneficial owner, 30% is disclosed, local person, all good. But the other 70%, they are controlled by someone else, and they used UBO exemption to report the corporate register. Those shares are registered in company in Cyprus. Director, some nominees, some of them from Russia, some of them not only from Russia, but might be connected to some sanctioned entity. Hypothetically, some information indicates to that. There were external accountant raised objections, so the enhanced due diligence was launched. Is it even worth to do this? This is the question what business or compliance might ask. We're going to earn like 2,000 or 1,000 euros on this purchase and then reselling this car. Should we do the due diligence? Should we take the risk here? Maybe we can state in the risk appetite. If we can't find out who is beneficial owner for this company, we see some risk indicators pointing to sanctions. Should we even engage in such sanctions? So such issue also might be addressed by risk appetite statement. So therefore, what we have encountered that there is no risk assessment in place. So I recently had a case when I was asked to perform an audit on internal control system. So I arrived and asked, please show me the risk assessment. What is it? What is it? We don't have any. So therefore we can't do risk assessment. So for example, if you're going if you're asking me to assess the tools you will take with you to go to survival expedition to some forest, I would like to know, is this forest in Canada or in Amazon jungle? So there might be some different tools you need to take with you. So therefore, I can't do audit if I don't see your risk exposure, risk assessment in place. That's the first thing. Secondly, is risk appetite well or vaguely formulated? Sometimes this is quite vague formulated. For example, we cooperate only with residents. What do you mean by resident? Is it based on citizenship, based on registration, UBO, on what else? So therefore, those shortcomings are quite often. Is even this obliged entity following risk appetite statement? Sometimes it is not. No one even cares about this. So if you have this risk appetite statement that you are not cooperating with like 5 types of clients, there should be some questions or additional controls in the procedure, how you control this and who is responsible for that. Sometimes it's just absent. You just forget about risk appetite statement when you're writing internal procedure, how to address AML risks. And also risk appetite statement, does it address sanction risks? So sometimes it is not. You have only AML risks, but sanction risks are something of different kind. So you have to address them all. So sometimes what facilitates the risking, sometimes it's lack of understanding how money laundering works. I also tell my colleagues, just think like money launderer. What would you do? And then develop some additional controls or write this particular statement in audit report. Sometimes it's poor training. It's hard to understand the statistics, how this company works, and then they can't even they're making decisions on hunch, not on data. Sometimes it's reducing administrative costs. So just we don't want to have like 5 AML officers and 2 auditors. We need only 1 and no auditors in-house and even outsourced. We just reduce the costs, and and that's why the risking is something that comes with it. Sometimes these risk scoring systems are quite poorly built without risk weight. Quite a simple way how you consider which is high risk and which is low or medium risk, and also we have this, we can compare the impact. The impact on obliged entity level usually, or the impact of the risking is less resources allocated, of course, less profits. You have also lower reputational risks, but it doesn't mean that you will not encounter any of them. Smaller costs of doing business, of course, unexplored business areas, which is bad for business. Of course, the procedure is much more simple, but what I have witnessed that even after massive de-risking, the procedure the internal control system is as complicated as it was before. It's widened the risking. So on an industry level, as the European Banking Authority also explained it, and they pointed out that the risking is sort of a plague going around banking sector throughout Europe. And it increases shadow banking, because those clients are they're looking for other more unregulated markets or unregulated financial institutions. You have unserviced clients, you have increase of illegal activity due to some underground service providers. You have less awareness, you don't see any transactions, you can't report, you can't stop the money because if it's flowing somewhere else without being noticed. And of course, moving assets cross borders. So for example, in Latvia, we say that we have many of our clients who were off-boarded by Latvian banks during the 2018, they moved to Lithuania. So therefore, assets have moved cross border. Do we know anything about what are they doing in their accounts in Lithuania? Probably not. Is it good? I don't think so. And therefore, usually using third parties or nominees to conduct business. You remember the example about this mobile phone, which is refused by PEP to buy. They refuse PEPs to buy those phones and obtain the loan. Probably this PEP will use third party to buy this phone, and then someone will pay for him. So corruption unidentified, and there is no one to watch after this. So some recommendations from my side. So less risk is not always the best choice. So you have to be able to govern the risk. Usually we can say that is this risk that you have put in the risk appetite statement or risk assessment even relevant to services you provide? But many instances I see that they just copied something from the directive and made up some risk factors. They are not even relevant to this obliged entity. In my opinion, auditor must always challenge the risk appetite. Why you are refusing those clients? Why are you not refusing some of the clients what you should do probably? And auditor must always discuss with senior management, not only with compliance, because compliance sometimes they like to be in comfort, so not challenged by business. So sometimes they have some understanding with business, what risks to take, with what risks not to take. But sometimes when interview goes on with the management, you have the different picture rather than with compliance and vice versa. I think that auditor must always, at all times, avoid creating wave of unnecessary risking. So this should be always kept in mind. And you always must spot imaginary risk. Although what I mentioned, this lawyers' mistakes, you are copying some risk factors from some EBA guidelines or some legal act, and just putting in the risk assessment without knowing even are they relevant or not. Such clauses as resident, reputational risk must be described in more detail in order for auditor to be able to audit are those clauses followed by practical implementation. So meetings with supervisors and auditors should be in place on a regular basis, because sometimes what we see that there is a FSA inspection, then it's annual audit, then it's some dedicated audit. And what happens that it creates like 3 or 4 waves of risking after that. And then clients are looking for other countries to open the account. So that is why to be on the same page about the interpretation of legal acts and understanding of which risk is significant and which is not the most important thing. Sorry about my colleagues, I'm criticizing them. In-house lawyers, sometimes they need to be kept on the leash, because when they come in, you as an auditor or a risk specialist, you can say that those risks should be governed as follows, and here is like best market approach, and FSA usually recommends something like this, and then in-house lawyers say, you're a good guy, but just show me the legal act where it's written that I should do this in this way. And of course, about 50% of recommendations, sometimes they consist not on specific legal acts, but on the best market approach. And then you can't show anything. And then everything you like trying to show, it's just lawful but awful. And of course, I agree with Aurelia, interviews. So you need to speak to those people, you need to understand how they think, what are the problems, and educate them. And then probably will find the best solution in your audit report. And of course, when you do risk assessment, it's the same thing. Not just lawyers, maybe I love working with business. I hate working with lawyers. So usually they understand what I mean. Lawyers usually ruin everything. So sorry for saying this, but that's what our experience with cooperating with many of our clients in this regard. So thank you very much for having me in this seminar.
Edgar, thank you very much. I'd say that your presentation was a cherry on top. Very hot topic, de-risking. And to myself, as last time, I wrote several key takeaway notes, even 4. So first one, de-risking failures happen due to a lack of knowledge. Less risk is not always the best choice. Spotting imaginary risks. And finally, in-house lawyers need to be kept on leash. That's a funny thing to say, but very true sometimes. Thank you very much for presentation. I would like to give applause to all the speakers, and also to the audience for saving some time to us and keeping focus on our presentation. What I can see in the message request that you don't have any questions, this is a funny thing to see because usually it does not happen. I hope that this is because of the reason that the presentations were informative. At least to myself, I have 2 questions. First question is to Karolis, another question is to Edgar. So Karolis, just for the people that are in-house lawyers or external lawyers or just lawyers, we actually don't understand what is the daily routine and daily work of internal auditor. So what is your daily schedule for the day? How do you plan your work? What are the challenges that you daily face? Just a brief intro.
Thank you. Thank you, Aurelia. Yes, I can expand the answer in a couple hours, I believe. But yeah, usually the daily routines more or less are repetitive throughout the years. The key things you do, as mentioned, from the planning perspective, every week you are once again re-evaluating your plans, you marking your tasks and the progress. One of the key things I personally use that a bit helps me to orientate where I am and at what place I am. I'm trying to implement at some stage a lean principle or tools that just helps me to follow up on where I am and what I need to do, when I need to send out information request, when I need to kick off the audit, when I need to do the documentation, and so on. But yeah, generally, everything that you mentioned in your presentation as a part of the internal audit function is more or less the same things. Nothing special, nothing new to add, basically. Thank you.
Good, thank you very much. Well, it seems that internal audit function, as mentioned, execute, report, and repeat. So each and every day, more work to do.
Exactly.
And then another question to Edgar, de-risking. So whether audit facilitates de-risking? What is your final touch on this?
My final touch, it actually is. At most instances, it is facilitating de-risking and shaming for having a risk appetite as big as you, for example, some entities have. But I would say that I have seen also good reports that they say that, for example, or even challenge recent risk-averse behavior by this for some obliged entities. So so there is some hope. But just be we should try to be not risk averse, but and following the European Banking Authority call for being more risk-based approach oriented rather than just refusing risk. We in Latvia had this exercise like 4 years ago, and we know how it might end. So it's not the best option.
Thank you. So again, I guess de-risking itself should not be formalistic. It should be actually based on some knowledge and experience itself. Thank you very much. It was very interesting to me. I hope that it was interesting and for the audience. I do assume that there will be more questions, but please use the opportunity because you have contact details of all the speakers, so you can approach us directly and give the questions directly to us. In any case, if we don't receive any questions from you on the internal audit question, please do come to other conferences and webinars we attend, and we can speak more about AML audits. So that's it for today. Have a wonderful day ahead, and let's meet at some next point.